Welcome, dear traders. You are watching a recap of the Asian session. On July 31, stock indexes are finishing the second summer months on a positive note. After Wall Street's solid rebound on a Friday, the market remains risk-on. Meanwhile, the world's main currency is on a track to close July with a 1% drop. While Asia-Pacific investors continue to assess the Bank of Japan's decision last Friday, risk assets are gaining momentum on optimistic data from China. Today, the authorities have announced new measures to boost consumption. However, market participants doubt that China will opt for aggressive stimulus due to mounting local debt, and the country still vitally needs it. After all, manufacturing activity in the world's second-largest economy has been falling for the fourth month in a row. True, today's data showed that factory activity expanded to 49.3 points in July, but still remained in a contraction for the fourth straight month. The end of July was rich in official promises. Bank of Japan Governor Kazuo Ueda said that the regulator's monetary policy would help the country achieve its 2% inflation target. Other speakers added that they needed more data to decide on further monetary steps. Japan's core consumer inflation is likely to gradually slow toward the year-end, and the Bank of Japan said in a full version of its quarterly outlook report. At the same time, today's economic data proved to be mixed. Japan's retail sales beat forecast, while industrial production showed just a modest recovery. Besides, yields on the Japanese government bonds jumped by nearly 0.6%, the highest since 2014. Against this background, the regulator announced unscheduled bond buying operations to the tune of 300 billion yen. The prospects of inflation were also touched upon by a representative of the US Central Bank. In his speech on Sunday, Minneapolis Fed President NEEL KASHKARI confirmed the cooling inflation in the country, given that the policymaker struck a hawkish tone in his previous comments. Such a stance shift caught market off guard. In response to the Fed's comments, yields on US Treasury bonds rose by several basis points, driving the greenback up. After reaching a two-week high last Friday, the dollar edged up to 101.70 in an early trade on a Monday. However, the dollar is back under pressure from new signs of inflation cooling in the United States. Friday's data showed that the Fed's preferred inflation gauge dropped to 4.1% in June, its lowest level since September 2021, and thus the greenback is set for its second straight monthly decline. The US currency is likely to close July with a decline of more than 1%. However, in the Asian trade, the dollar seems to have got a chance of gaining short-term upside momentum. The dollar index, which measures the currency against a basket of 6 peers, is currently consolidating in the range of 101.50 to 101.90. According to the trading chart, the asset is still in a positive territory. The levels of 102.40 and 102.60 may act as the next resistance lines, support levels for the greenback after breaking through. Amid a short-term rally in the United States dollar as well as mixed statistics from Japan, the dollar-yen pair has turned positive today. On a Friday, the pair sank to the 139 mark. Then the USD JPY pair resumed gains that extended into Monday, and the yen ended the Asian session near 142.5. showing signs of continued decline. In the face of the Bank of Japan's first special bond buying operation since February, the pair continues to trade upwards within the intraday range of 140.60 and 142.40. This indicates that the yen may depreciate about 2% against the US dollar by the end of July, notching its first monthly low since March. Nevertheless, yen buyers have a chance of regaining control of the market if the price consolidates above the resistance area of 141.80 and 142.0. The AUD USD pair also collapsed last week. However, it still managed to stay within the 5 months trading range of 0.6459 and 0.6900. Moreover, the Aussie turned positive on a Monday and even advanced nearly to 0.67, driven by optimism from China and stronger risky assets. In the Asian session, the Australian dollar traded upwards in the range of 0.6649 and 0.6701, and now the Aussie may face resistance and support at around the recent high of 0.6820 and near the recent low of 0.6600, respectively. After the Chinese authorities' promises, the focus of traders shifted to the meeting of the Reserve Bank of Australia. There is some uncertainty of whether the regulator will raise rates or not. According to economists' recent market expectations, the Australian Central Bank is unlikely to take an aggressive monetary policy step. Notably, the regulator is set to hold a board meeting tomorrow, August 1, after weakening during the previous 4 sessions. The New Zealand dollar is also on the rise today. In an early trade on Monday, it traded upwards in the range of 0.6146 to 0.6206. In the Asian session, the Kiwi broke above the psychological level of 0.6200 but failed to stay firm there. Nevertheless, it has every chance of closing July with a 0.9% gain. And that's it. We hope that July will be lucrative for you. Have a good start to the trading week. Hit the subscribe button and keep close tabs on the market developments with us. See you soon.